Welcome to the Secrets of College Planning. I'm your host, Anthony Uva, and today we're going to get some insight in financial consolidation. My guest today is the Vice President of Wells Fargo, the Division Market Manager. His name is Maurice Benson, and welcome to the show.
Thank you. Glad to be here.
Yeah, no problem. So usually we start out our guests, and because you've been a guest already, where did you go to college?
Oh, I went to the University of Texas at Austin.
All right. And so let's go back a little bit in time and go into your background on how you got there before we get into finance.
Okay.
So when did you start thinking about college? Was it freshman year of high school or was it senior year of high school?
Good question. In my household, both my parents went to college, and so that was one of the things that even probably in 8th or 9th grade, it was pretty much driven into both me and my sister's heads that we were going to go to college.
Okay.
So it was, the process was, it started pretty early on. Honestly, when I was maybe in 7th or 8th grade, I thought I was going to go to school in Arizona for a while. Then I thought I was going to go to Georgetown for a while. Then we moved to Texas, and I started looking around, and it was one of those processes where I just kind of had to go around and find the right fit. So.
And what year was that? Would you say when you got to Texas?
We moved to Texas in 1983.
Okay.
I graduated from high school in 1987. And so that year of 1987, me and my dad kind of just sat down and started thinking about where did I want to go and what was going to be a good fit. My dad at the time was an administrator at Texas A&M University, and so we ruled that one out, which is kind of an interesting. It was an interesting conversation, but from my dad's perspective, he felt like for me staying at home wouldn't have been a growth opportunity. So he just thought, let's just not put that in the mix so we don't have to have that as be part of the conversation, which most people think that's different, but it was right. I mean, I needed to get away to go to school.
So how did you pick University of Texas?
So we went around on a little road trip and went to Rice University in Houston, University of Texas in Austin. We came out east, went to Georgetown, which was on my list for sure, went to Oberlin. Went to Arizona State University, which again, another one on my list. And so I went to look at all those. I ended up applying to 3 of them. I ended up applying to Oberlin, Georgetown, and University of Texas. So I got admitted to all 3.
Wow.
And then it was really then about cost and just kind of weighing the opportunities.
So no sports or fine arts or anything like that involved. This is strictly academics.
Strictly academics. And when it got down to it, I got lucky enough to get a full academic scholarship to the University of Texas. So that made that choice relatively easy.
Now, did you have that at the other schools as well?
I got offered scholarships to the other 2, but none as comprehensive as University of Texas. So I got lucky. I didn't have any out-of-pocket costs to go to University of Texas.
Wow,
right.
so that's really a main goal for a lot of parents out there.
Right.
Is to get the money for school.
I was lucky, and so all those years of, I guess, studying in high school paid off, and part of it was also it wasn't just a grade point average, but from my understanding, it was the clubs and all the other stuff, the extracurricular stuff I did, and that really helped. So
So it's an all-round type of person.
That's what I was told.
That colleges look for.
Yeah, that's what I was told. So I don't know for sure, but that's what was passed on to me.
Good. So now everyone knows that you're a vice president at Wells Fargo. So what's involved in division market manager?
Yeah, as a division market manager for Wells Fargo Education Financial Services for the Northeast, my team, we help families and students find resources to help pay for their college education.
Okay. And so now college education costs an average of around $36,000 these days. Most sources out there are saying that.
Right.
So what are some of the things that you hear from families why they're looking for loans?
Right. So what I would say is this. Families are usually coming to us looking for resources because they don't necessarily understand all the options that are available to them. And they're waiting to the last minute to find out what the options are. That tends to be the most common comments that we get when they come to us, as in what do we offer? We don't know what's available. We don't know how to handle this part of it. What usually happens is there's a bill that's sent to the families from the university, and they've received some form of financial aid, but then there's a gap that's not covered by financial aid that they're being asked to cover, and they're getting that in the 11th hour, and they're not prepared, not ready, don't necessarily know how to cover it. And the guidance is, you'll have to go find some resources, and they're coming to us to ask, what can you do? What do you offer? And that's where we want to sit down and try to find the right resources to help them out.
So what type of options do you give some families that come there?
Well, there's all kinds of options, and I would say that there's no one option that's right for every family. And I think what's great about coming to us is that we want to sit down and make sure that the option works for that family. And we offer loans. We can offer student loans for the student themselves. We can offer loans for the parent to take out in the student's name that the parent can pay back. But we can also offer investment opportunities like 529 plans and different options like that. And we can also do a combination of those if necessary. So it's really about finding what resources, what combination of resources works best for that particular family to make sure that in the long run that they're financially successful.
Gotcha. So now, what happens when families go to school, they have to take out these massive loans, $36,000, $40,000, whatever the amount is.
Yes.
And now the student comes out of school and has $100,000, $150,000, $200,000 worth of loans that are out there, but maybe has multiple different vendors that have, or banks or institutions that have given them all of this money. What way are they gonna consolidate these type of loans?
Yeah, and this happens now and then too, where you find a student or a family where they've gone to college and they come out and they graduate and they've borrowed or they've amassed debt from separate borrowing institutions, separate lenders. And so they're trying to put all those loans or put those loans together so they can make one payment. And usually what I would say is the first thing you need to do, and this is usually one of the first tips I would give to a family, is you have to get organized first. And that's figuring out where your paperwork is and figuring out where all the loans are. That's sometimes it's not a difficult task, but it has to be done. The first place you want to go is the NSLDS, which is the National Student Loan Data System. And that's, you can go to the website, it's www.nslds.gov.edu. That's going to be the place where all of your federal loans will be housed. That will show everything that you have currently, where the statuses are, and where, if you borrow from the government, where they're currently located in the balances. So I would start there. Okay. If you're missing any loans and you're sure you're missing some loans, they're not there. Those are probably more of your private loans, which means those are coming from an outside entity like a bank or a private company. In that situation, you're going to probably have to go to your school first to see what records they have, or I would start checking your mail and looking for statements. And another comment I've always said is, don't open your mail when it comes to you. and people sometimes don't open their mail, but that's going to show where your other loans are. But put all that paperwork together and start looking to see where your loans are and figuring out, where they are. And once you get there, then yes, then at that point you can start thinking about possibly consolidating those loans together.
And where do they consolidate loans? Do most people do home equity loans where they do that, or is it something totally different?
Totally different. So the education financial system has its own consolidation program that's separate from a home equity. So you can do a federal consolidation loan, which would be through the federal government, which is a direct, I guess they call it direct consolidation loan, and that's putting all of your federal loans together into one. You can do a private consolidation loan, which would be putting all of your private loans into one, or today you can actually put your federal and your private loans together into one.
Really?
Yeah, so there's pros and cons into everything. So, consolidation loan basically is you're borrowing money, creating one new loan, and paying off all the existing ones. So once you've done it, you've done it. All those other loans are paid off. So
does it lower anything for the families?
So at this point, if you're creating one new loan, one new balance. So inherently just that one balance, and now we're calculating, payments off that. Inherently that'll lower your loan. Then depending on the balance, you can actually extend the payment past the normal repayment plan. So a standard repayment plan is 10 years, but if you can consolidate, you can actually take it out past 10 years. So in some plans and some programs, depending on the balance and the loan type, you can take it out to 25 years.
Wow.
So you can lower the payment. The con, sometimes when you extend the repayment plan out past 10 years, you are going to pay more in the long run because you're going to pay more in interest in the long run. But yes, you can lower the payments too. So that's part of the con.
So you find all of these families that are out there that, they've gone through this downturn in the economy that has happened to us the past 5 or 6 years. And now they're in this situation where they have all of this debt that's out there with student loans. What do you say to those families that have gone through all of this?
So I'd say that the best thing to do is to, one, get organized, and two, stay in contact and talk to your lender. So we want our families to be successful, and we want to work with families and find options for them to manage the debt. But if we don't know their situation, if we don't know what's going on, we can't help. So another tip that I would always give families is to make contact with who you borrowed from and stay in contact with from who you borrowed from. And so when you make contact, make sure we know what your phone number is, what your address is, what your email, anything like that. Because we would want to reach out to you if anything we need to share with you about your loans that is pertinent. We want to get in contact with you, but also you want to stay in contact with us. And if you're in a situation where you are having some issues possibly making that payment, then the earlier you reach out to us and the more we know, that gives us the more options to help you handle it. And we have options, and we definitely can help you make those payments and stay current.
Now, some students, what's the process with the students when they graduate? There are families that have told me it's a 6-month grace period,
Right.
a year. There are ones that defer for 2, 3, 4 years down the road. What's the difference between all of this that's going on?
So you're talking about the grace period, and it depends on the loan, it depends on the loan program, the loan type. So the grace period is a period after you graduate or separate from a university before your first payment's due. It can be anywhere between 6 months to 9 months. It just really depends on the loan or the loan type. Some loans go into immediate repayment, so there is actually not a grace period.
Wow.
And so this goes back to you have to be organized and figure out what type of loans you have. And understand what type of grace period you have, because they're all different.
Yeah.
And so, yes, you can, depending on the grace period, you could have 2 or 3 different types of loans with 2 or 3 different types of loan periods, and you have to understand what those are.
So what's the consolidation process?
Yeah.
What does someone do?
So the consolidation process itself takes about, and again, depending on the particular type, it will usually take about 30 to 60 days to complete. In your best way, you want to sit down and talk to someone about what's the best option, especially if you've got federal and private loans and you're considering putting both of them together. When you consolidate, you are going to give up some of your benefits, and some of those benefits could be any interest reductions that you have, any benefits that were coming along with the federal loans in some situations from a deferment or forbearance benefit. And so you want to weigh that out before you actually go into the process, just so you understand what you're giving up. And then from there, you would make sure that you had all of the loans that you want to consolidate, that you know where they are, because once you do it, you can only do it once. So you don't want to leave anything out. And then you would want to look around and try to find your best deal. So with federal loans, you can only consolidate federal loans with the federal government. With private loans, you can actually shop around and find the best price. And find a good deal, let's say, put it that way. And then you would turn your loans over to whoever you're going to consolidate with. They're going to make a brand new loan. They're going to pay off all the existing loans that you have, and they're going to give you a new payment booklet and a brand new loan that's going to be just that one balance.
So now, what's your take on what's happening out there? Because you're starting to see a lot of defaults with these student loans. And from what I hear out there, student loans cannot be in bankruptcy or anything like that. So all of these kids are out there trying to find a way of paying these things and can't. So what's your take on all of that?
Yeah, and I might not be the best person to comment. I'm not a true economist or anything like that. The rules, as I understand them, are student loans cannot be discharged on by bankruptcy. But you hear stuff all the time. So what I know is what I've said, that we from an organization want our customers to succeed financially, and the more proactive a customer is about letting us know what their situations are, and are willing to work with us, we are willing to work with them too, and we will help them make the payments and get through it.
Yeah, that's key. That's very key these days, especially with kids just going out there and trying to find things.
Yeah.
And they can't. So all of these kids that are out there, what are they looking at schools? Do you see where it's, big Division I schools are more? Is it the Ivy League schools? Is it the mid-size or lower schools? Do you see a lot of these kids going in these different directions, or is it just like you had before, where you're just looking for a particular school that fits your environment?
I think it's, and this is just my perspective on it, I think it's just fit. I don't know if there's any trends that we've seen from that perspective. It's just fit. Should cost be a part of it? It depends on your situation. I think you have to weigh out everything, and whatever makes sense for that particular family and your particular situation is probably the best situation for you, and you just have to take the time and do some research and talk to some people and get some help and figure it out. But it seems like it's just it's got to be a good fit, and it's got to make sense for you and your family. Yeah. That's usually the best advice.
Now, coming from someone that had a full scholarship at the college level, what are some of the other things that maybe the school didn't pay for? Do families look at that, or sometimes they don't?
Right. So what you would want to question there is, so when we talk about tuition and fees, it's the fees and housing and how all of that is actually added into the price. When you're visiting a school for the first time and you're looking at the total cost, a lot of times that total cost will include the housing, on-campus housing versus off-campus housing. Sometimes it will not. So you want to make sure that you understand what the total cost is going in. You'll also want to understand, sometimes what the local cost will be. So what's books and what is going to the restaurants in the area, because cost of livings are different depending on the city, and what kind of factor that'll be as you're looking at monthly charges.
So if a school, let's say a school is an average $25,000 per year, these kids should be looking at that $25,000 is including the room and board.
Yes,
as part
it
of
could be, right.
So the extracurricular activities that this student might have, like clubs or going out or eating off campus, or the books for the classes, that's not included in that price.
It could be.
It depends,
right. So what universities will do when they're quoting an average tuition cost, they'll try to factor a lot of that in, so they'll give you a good picture of what that looks like. I would just suggest that you make sure that that is included when you're looking at it. Some do, most do, but I feel like you should always ask questions and just get clarification of what that cost is. You can always ask for a breakdown from the admissions office of what those costs are, but most do.
Now, how about traveling? I mean, some families,
right.
You were University of Texas, but how far were you actually from home?
Oh, wow, let me think. 2 hours?
Okay.
Yeah, not too far.
So not too far. So now, if you went to Georgetown,
long way.
It's a pretty long way.
Right. Yeah, so I had friends like that, where a good friend of mine who actually lived in the dorm right down the road from me was an out-of-state student. And so you start looking at the difference in cost between in-state and out-of-state. So his tuition, I believe, was much higher than mine. Plus, for holidays, I was able just to drive home, and he pretty much stayed in the dorm because he actually lived in California. Wow. And so his travel costs were much higher. But that is something you would have to factor in too.
So that's not part of that tuition cost?
Hard to factor that in, you're right. And those are stuff that families should look at, you're right. And just consider. What are the costs? How do you factor that in? And does that work for your particular situation?
So now, what's your take on financial aid when schools are doing financial aid programs? Sometimes families have to find out what the school is willing to offer. What's your take on financial aid at these schools? Because every school is different.
Every school is different. Every school has its own policy and how they handle financial aid. The earlier you apply, the earlier you turn in your information and talk, the better chance you'll receive of getting a full package. You should compare packages for sure between two universities because, as you said, no two universities are the same. I always suggest going in and talking to a financial aid counselor. It's hard to tell your situation on a piece of paper, let's say, versus actually explaining it to someone in person. And there's ways that financial aid counselors, once they hear that, can make adjustments and work with you to make that financial aid process or that financial aid package look better than what it can by turning it in on a piece of paper. But yeah, you should always start early, apply early, try to make the priority deadlines. Almost every university is going to have a financial aid priority deadline, and if you turn your information in by that priority deadline, that pretty much ensures that you'll get the best package available.
And the loans from banks, do they have any particular time frame, or is it when the student gets to college they can apply for bank loans anytime?
We would suggest when you're applying for a loan, a private loan from a bank, that usually I would say maybe 6 months out early is about the time you want to start looking and comparing that. You should start doing research before that to kind of figure out which loan might be a good fit for you, but 5 to 6 months out is probably about a good time to start applying, just from a credit perspective, But but you should start doing research before then.
And how long does the bank tell these families if they qualify, don't qualify? Is it pretty
instant? Yeah, and not all situations are the same, but for most financial institutions, it's a pretty quick turnaround.
So 6 months out, just to know. Is there any financial institutions that families can look at in different sections of the country?
Yeah,
or?
so luckily for us, we operate in all 50 states, so they can, if they want to come with Wells, we pretty much do business everywhere. But some are regional and local, and if they would rather do business or banking with that organization, they could. Some universities will provide a list or some suggestions of banks that they prefer to do business with. So a family can totally go that route too, and ask for some help there. If not, there's always the internet. You can do some searching there and do some research, but you should really compare. You should check price. You can apply at different. You can actually make applications at different lending sites to see what kind of pricing you would get at different sites with no penalty. Wow.
So how about international students? Do you see a lot of international students where they're applying for these type of loans?
So an international student can get a loan if they have an American cosigner or U.S. cosigner. But for the most part, international students have to pretty much pay on their own for college if they come over. Okay. So not as much as you would think. But we are starting to see a lot more international students who are trying to apply for loans with U.S. cosigners or try to find alternate forms of financing, because we're just seeing a large increase in international students.
So is Wells Fargo in these international countries where they can ask Wells Fargo for any advice?
So personally, we offer the option of borrowing with a U.S. cosigner. As far as our numbers of international, I'm not sure off the top of my head what that looks like.
Okay, so at least
But we definitely offer it.
They're out there.
Yes. Oh, yeah. And like I said, recently I know I was reading somewhere, I can't remember off the top of my head, but I know the number of international students has increased dramatically in the United States over the last 2 or 3 years.
Yeah. So and there's money for them. You just have to find a particular avenue to get money if they don't have that difference that you were talking about before, right?
Yeah.
So basically, we're coming to the end of our show, and I wanted to find out from you, like I did the last time, because if you guys didn't see Maurice the last time, he was here about a year ago talking about loans. And so brought him back because a lot of people asked about consolidation of loans. So what advice do you want to give to the families out there that that are looking to consolidate?
My advice would be kind of what I was saying before. If you want to consolidate, you definitely need to weigh out the pros and cons of consolidation. So the pros would be you get to lower your payment, and you can extend the repayment out past 10 years if needed. The cons might be that you might pay more on the loan because in the long run, if you extend the payment out, it might cost you more, and you might give up some repayment options and benefits by consolidating. But like I said, there's no two situations are alike, so you need to figure out what works for you and what works for your best situation, and then make that decision. It's a great program. And if you are able to take advantage of it, I would highly suggest it. But like I said, it's not the right fit for everybody.
Right.
So just make sure you understand what you're getting into before you do it.
Great. Well, thank you very much
Yeah.
for coming again.
Thank you.
Appreciate it. And you've been watching The Secrets of College Planning. I'm your host, Anthony Uva. Until next time.